Good morning. Happy Wednesday. It is October 22nd. We are getting into earnings. The volume of earnings reports that are coming out it's very high, and it's going to stay high for the next month. We've got a nice list of stocks to take a look at that are going to announce or have announced this morning, and we'll take a look at what they announced. We also have a list of stocks that we wanted to take a look at, and we hope that you find the analysis interesting. As you may recall, if you're new, we analyze stocks. We look at fundamentals. We also look at the charts to see what we are finding in that particular stock, to see if maybe it's a good investment at this time or if it's not a good investment at this time. So we'll be doing that type of analysis on the stream. I am joined by my colleague, Daryl. How are you this morning, Daryl?
Doing very well, Victor. It's good to be here. How are you doing?
I'm doing great, and Shadow Guy is on. I am wearing the AWS hat, and thought it'd be a little bit of humor with that big outage that happened a couple days ago. And I was given this hat for free, so I usually don't wear this, but hey, I think people know who AWS is a little bit more this week. When their Reddit went off or their banking app wasn't working, you found out that AWS is the biggest cloud infrastructure company in the world. Of course, a part of Amazon. Saeed, great to see you this morning. Thanks for joining us. Thanks, everyone, for joining this morning. We've got a pretty good agenda. We hope you enjoy it. So, as mentioned, we've got earnings. Yesterday, the Dow went up, S&P settled down a tiny bit, and the NASDAQ sold off as a whole index. Google sold off because OpenAI released a browser. I believe they call it Atlas, and it runs on Apple. Doesn't quite run on PC yet. And of course, the market treats it like, there goes the Chrome business.
Yeah.
Which is kind of silly. It's like, yeah, Chrome's used by like 1 billion users. Give me a call when Atlas gets to 100 million users, and we'll talk about threat to Google Chrome. But, the stock was down. I thought it was an opportunity for potentially those that want to buy Google to potentially pick up a better price. I'm sitting on a very, very, very big pile of shares. I don't need more shares, so I didn't buy, but I am a happy camper with Google this year. Looks like Broadcom settled down quite a bit, Micron, NVIDIA. So the semiconductor space, this is really going to move when the big hyperscalers, Amazon, Microsoft, Google, announce their earnings. And of course, Meta. If Meta comes out and says, hey, we're going to slow down on our data center build, we're good, we built everything we need. We'll see if they say that, but that'll be important to see. Tesla settled down yesterday, down 1%. They're going to announce today after the market closes, and Daryl and I will be co-hosting a watch party for Tesla this evening, I guess afternoon, depending on where you're at. And it'll be interesting to see what they report. I'm expecting the number of cars sold in Q3 is going to be good because they had, I think, the incentive on EVs going away created a lot more demand. So I expect their sales for the quarter will be good, but their guidance is probably going to be concerning, where they say, okay, we had good car sales, but going forward, it doesn't look too good. But don't be scared. We're going to have robotaxi. Tesla will have robotaxi, and they'll talk about other really interesting ideas they have. and a lot of investors truly believe in Tesla. So I don't know. The stock could trade up, could trade down. We will find out. Amazon, takes a good outage to make your stock move higher, I guess. Over 2 days, the stock's up nicely. It was up on Monday and it's up on Tuesday. All kidding aside, I'm not quite sure why, other than I think Amazon, out of the most valuable stocks that are out there, I think Amazon provides the best opportunity simply because it's just a incredibly valuable, important company with massive moats. Their e-commerce business, their network, their scale, there's nobody that can rival their e-commerce business. Their cloud infrastructure business is the biggest. And it's very hard to move workloads from, let's say, AWS to somebody else. Very hard. So that in itself, that moving cost, the difficulty, the risk of moving a big workload from one data center to the next really helps them maintain those revenues, helps them grow. Because just think about Reddit runs on AWS. Well, we know that Reddit's growing like a weed. They're growing 60%. Well, every time they grow by 60%, they're using most likely around 60% more resources from Amazon Web Services. So Amazon's got built-in value or growth in its customer base. So there's just a lot to like there. It's my favorite out of the top 10 most valuable stocks out there. That's the one that I'm buying. I already own tons of Google, tons of Meta. I don't know how much shares weigh, by the way, but of course, tons is an analogy. All right, moving on. This space is really working, aerospace and defense. I think we're going to talk about RTX a little later, and look forward to seeing your comments on that. RTX has done really well this week. GE is in that mix, so that did well. And that's what's going on with the heat map. The earnings, they're going to happen today. The big ones, Tesla, SAP, IBM. And this morning, after we get done with a short list that we wanted to cover, we're going to go over Thermo Fisher, AT&T, GE Vernova. And I think that'll be good on morning earnings releases. So let me check on the chat here, and then we're going to get into a list, starting with ADC. And I'll go ahead and let you share your screen, Daryl.
Okay.
And let me just check the comments real quick. So Shadow Guy, again, thanks for joining. Really appreciate you tuning in. Saeed, again, good morning, sir. And then, so Amazon will announce on the 30th, which is next week on Thursday. That'll be huge. We got to have a watch party for Amazon. Unless AWS goes down again, we may not be able to have a stream altogether. But enough of the humor. The floor is yours, Daryl.
Okay, so Agree Realty is a REIT, and they beat on both the top and bottom line, and then they raised their investment guidance to 1.5 from 1.5 billion to 1.65 billion, and they also increased their full year AFFO per share from 431 to 433, where the consensus was 425. So this is a REIT that performs pretty well. If we look at fast graphs for this one, and I'll go out to the max history. They've been trading above their normal AFFO, and that's the multiple that the market typically applies to them. So they've been trading above that multiple for quite some time. Now I'll go back to just a few years here. And then in 22 and 23, you saw them trade actually below their fair value. And I picked up most of my shares in this area, waiting the interest rate decreases, which are started in 2024 and continued in 2025 and are expected to go through 2026. So now that those rate cuts were announced, they did trade back to their normal multiple, and they have pulled back here in the last 6 months when there was some debate whether we needed rate cuts, whether the Fed was going to continue with rate cuts. But now that it's almost certain that we're going to have cuts, they've had a really good run. So we'll go and look at their chart because it's been a beautiful thing. So ADC, we'll just look at it with trend lines. So what I have on here are two trend line. One is an upward sloping, connecting the bottom that we got in early 2025 and the bottom that we got at the beginning of October. Then I have a downtrend line connecting the high in April, and it's touching three tops here. So it tested that line and was rejected 3 times. But we were getting, this is a wedge basically. So we were getting to a point where the market, it was going to break one way or the other. And my guess was it was going to break to the upside because of interest rate and just the management for this particular REIT. So they went on a 10-day run starting on October the 7th, and they went for 10 straight days of higher closes. And I made my last purchase just as it broke out above this trend line. So at about $72, and it's since run up to 75. And then let's see what else I wanted to put. They did have a bearish engulfing candle yesterday, so that was before the earnings were announced. Looks like they're pretty much flat before the market opens, so we'll see if this bearish engulfing candle results in a down day. That's typically what it indicates, but many times it's not 100% accurate by any means. I put it closer to about a 50-50, but we could see a little pullback today based on this candle. My guess is they're going to continue to run higher. Let me see what their, yeah, that is the high. So that 77 price is the all-time high. So anyway, that's ADC.
Looks good.
Yeah, I actually sold. I had about 345 shares at this point. I sold 45 of them at the peak, and then I've been buying back in as I've been waiting for these interest cuts and made my last buy just as it broke above this trend line.
Yeah. And interest rates are going to really affect stocks, some more than others. And this one here, real estate's going to be enjoying a couple of good years, by the way, because I don't think interest rates are going to, go higher anytime soon. We have a president that really wants low interest rates. He has the ability to put in a new chairman of the Federal Reserve in May, and he's likely going to select somebody who's committed to low interest rates. So it's going to create an environment where these real estate companies are going to flourish. And this is one example. So nicely done on this stock. Would you like to move on to RTX?
Sure. So we can.
Why don't
jump
I
over.
take this screen, let you set up, and then
Okay.
we'll go in that direction. So RTX enjoyed a terrific day yesterday, up 7.67%. This is an aerospace and defense company. They have been enjoying good growth, and the stock's been doing great, up 49.5% for the year to date, up 37 on the 1 year, and the 5 year looked terrific. So the market cap of RTX has gotten to 231 billion, revenues at 86 billion. They are getting a little expensive according to analysts, and their revenues are expanding now. They're not, there's not a big wow factor, but it looks good for them. It's a big company in aerospace. They don't quite grow as fast as, let's say, a technology or e-commerce or social app kind of company. These guys are having to build something and ship it out, and whatever they build has to be high quality. So growing by almost 12% is really good. Shows that they're accelerating growth. If we look at the quarterly results, overall trailing 12 months look good. So they came in with very good performance. The business is doing well. It's got good momentum. Its cash flows are doing well. This is not my favorite industry. I don't own any aerospace and defense, and primarily because it's got a ceiling on gross margin and profits. It is a good, safe stock because they tend to do well, whether we're in recession or a boom economy. We need to have a strong military, and so do other governments. It's just a necessity. So that's what's going on there. The analysts, 13 of them, cover the stock. They think it's a little expensive now, but probably fairly priced is a better description of the situation. They expect to grow over the next couple of years. That looks good. The earnings per share is also going to expand a little faster. So the PE is supposed to get down, over time into the 20s. But if the stock keeps moving higher, it'll maintain a PE ratio of 28 or so. So RTX had a great day yesterday. Looks really, really good. I don't know if I have a valuation on RTX, but let's take a peek. I do not. So I'll just throw it over to you, Daryl, for the charts.
So they beat on the top and bottom line, and they updated their full year outlook. Adjusted sales will be between 86.5 and 87 versus the 85 consensus. Organic sales growth is 8 to 9%, up from 6 to 7. Their adjusted EPS of 610 to 620 versus the 595 consensus. And they confirm their free cash flow measures. And RTX is really extended on its price as calculated by fast graphs. So their normal multiple is 17. They're trading at 28, and their fair value is a 15. So they're really extended, and I was a little bit cautious as we moved into the earnings. And they had been trading in a trading range since about February, and they had actually fallen out of that trading range as they were moving into the earnings. Then they moved back into it. Yesterday they reported, and the candle that you can see here is basically a shooting star. So that's when you open and close in the lower portion of the candle, but you have a sharp upward increase. I actually sold 10% of my shares right at that peak yesterday.
Really?
Yep. So
Nice.
I suspected it was going to pull back a little bit because they're already extended, and I just trimmed 10% when it hit that peak
Did
yesterday.
you put in a buy order with a particular price?
No, I was just watching it early in the
Mm.
morning. Let me see what time I
You may
actually.
have a career as a day trader.
Let's see when I actually executed the was about 11:16
Nicely
Eastern
done.
time yesterday. Um,
So I have maybe a little conversation piece is around, when to sell. Selling stocks is really, it's difficult to make the decision. I would I would say that it's harder to determine when to sell than it is when to buy. Like buying a stock, you see an opportunity, you see a trend, and you get into the stock. Now, when you're in a stock like a winner like this, you're like, oh man, the times have been great. Selling, making a decision to sell is hard. Or maybe you have a stock like an Adobe that hasn't been doing great, and it's hard to make that decision to sell. So back to you, you executed a sell of 10% of your RTX shares. Can you speak about like your methodology or process to make a decision to sell?
I don't have any problem selling because I have a process in place that I follow, so I don't have any problem selling. But this is basically a full year trend channel. It's a year long. You can see that it trades within that trend channel. And yesterday, I mean, 3 days ago, it was trading below it. And then all of a
Hmm.
sudden they report, good report, but they were already extended in price, in my opinion.
Hmm.
Um, I have an evaluation on them. Let me see where my price is. So let me go back here. So I have a value of 121, and
Hmm.
then I have a margin of safety on that at 97. So I thought they were extended. They did have a good report. They shot up, went out of the channel, so it was kind of a no-brainer for me to trim it. Um, I don't have a whole lot of this. I only had like 30 shares going into the earnings, but you can see that I've entered into this one 15 times. I have 5 open trades and 10 closed trades, but all of them
Hmm.
are winning trades with
Excellent.
yeah, and I have a return of 130% on my currently held shares.
Very good.
So, yeah, it's not I have a process that I follow, so I don't find it too terribly hard to sell.
Great. Thanks for commenting. Yeah, you want to move on to United Health?
Sure.
All right. I'll
I know.
start things off. And before I jump into United Health, so looks like Shadow Guy's got SWX, which is in the Swiss market. AERO. Let's take a look at that when we get a moment. And then DJ wants to look at CNC. Glad to. And give us a few minutes because we wanted to cover a string of stocks and then we'll get to those. But thanks for asking about that. So, United Health, this has been a stock that's been under a lot of pressure for the year to date. It's really sold off the 1 year, just not a very good picture. The 5 year, you see that the stock was really working well. A lot of bad things happened to the company, but the core business, I don't think, is broken. I think just a lot of negative news. There is some bad, I would say some decisions in Washington that affect the company, but I don't think affect them to the point where they're going to be hampered too much by it. I looked at, and I'll comment later on Elevance, but um, the encouraging sign is that this stock is picking itself up. And it'd be really interesting to see Daryl's analysis of the charts. The 1 month does look good. PE ratio is nice and low on a big cap stock, 330 billion. And dividend has gotten to be nice and good. I owned UnitedHealth. I made terrific returns on UnitedHealth, a long-term real winner for me. I sold it beginning of 2022. And the dividend was always like 1% or less, which is interesting. And now it's up to 2.42 because of that stock price. Now, the business is not broken. The business continues to grow. And the one comment I'll put out there, which I'll extract out of Elevance Health, I think, is the second largest health insurance payer. Number one is UnitedHealth. And what I saw from the Elevance earnings was that Elevance Health maintained the number of members that pay for insurance from Elevance Health. They kept the population the same roughly, but they increased their price by 12%. The price of the insurance, and let's face it, we're going to pay for health insurance. So my conclusion is that UnitedHealth can maintain their sales growth because they have pricing power. That's really important for me to know about a business. You come across some businesses where they don't have any pricing power and they're just subject to what the market's willing to give them. That's not a very desirable business, because when times are tough and expenses go up, costs go up, they get squeezed. They're like, oh man, I can't move my price and I'm getting squeezed. I'm making no money. I'm losing money. But Elevance and UnitedHealth, they have pricing power and they'll be able to move their revenue line higher as the expenses increase. So UnitedHealth is there. Some of the metrics that are important to UnitedHealth is there, and it's not listed here, but I'll show it to you in a little bit, is their combined ratio, and I'll show that to you in a little bit. Their balance sheet's good. What are analysts thinking here? Hopefully, I think analysts by now have been adjusting their price targets on UnitedHealth. We have some analysts that are optimistic that this business is going to get back on track with $650 price target, and some analysts at $198. They believe it's discounted by 10.5%. The business is going to continue to grow, although the growth in 26 single digit, but the profit is going to expand quite nicely, especially in the outer year. So the PE ratio is going to really drop. I think the stock is on its way. I think it's headed in the right direction and is going to have better days ahead for United Healthcare. United Health is discounted nicely, and the ratio that I was looking for was the medical loss ratio, and the ratio that United Health has when it comes to that ratio within health insurance payers is 89.4, which is good. You want to be under 100, showing that you're making money. 100 would be your expenses match the premiums you're charging. Well, 89 means that you're charging $100 and your expenses are $89.40. So that looks good. Overall, I think United Health is discounted, and it's one of the big bets I'm making here in 2025. I'm putting a lot of capital into United Health, and so far, so good. We'll see if it keeps tracking higher. All right, over to you, sir, on United Health.
Okay, so we've been watching this one for a while, and I had this chart stored. The first downtrend line was drawn here, and it did break above that. And then I had a buy price of about 290 or so. I can't remember what announcement they made here. I think it had to do with the percentage of their plans that were in the can't remember. Was it the gold or higher? Because they get paid additional funding from the federal government when that happens. So back here, when they were dropping, this was some accusations of
Right.
yeah,
There was an investigation that on some Medicare plans, they weren't submitting the Medicare claims appropriately.
yeah,
Those are accusations. Nothing's been
yeah.
concluded
They
yet.
have not been proven yet. And then they pulled their guidance, so that made it fall even further. But they consolidated for a while, and one more dip, and then they jumped above that price, and they've pretty much been tracking upwards since then. Right now, they seem to be consolidating a bit, but I added this additional trend line because they did break above that yesterday. I also have the Fibonacci retracement between the low and this high here. So it hasn't quite retraced 38.2% of its value yet, but it's getting very, very close to that. Now, sitting right above here is the 200-day moving average, which could be a little bit of resistance. But one of the things that I noticed is most of the buyers over the past year have been in this price range of 326 to 299, which I think includes Buffett.
Very good.
So anyway, there's a lot of support down here. Once you start moving up in price, we don't have what I would call a lot of stranded longs, so I don't expect a lot of selling pressure there, but we could have a little pause at the 200-day. But I think UNH is still looking good at the moment. They've
I think
held,
it's headed towards $600 a share. It's
yeah,
going to get there in the next year to 2 years.
they've been holding the 50 RSI or above that since the 14th of August. Their PPO is drifting downwards a bit, but it's still in bullish territory. And the money flow the last month is positive or bullish. So we've been looking at that one. I thought I would just give an update on UNH.
You got it. Thank you, sir. So I may have to take this AWS hat off because Amazon stock's down, and maybe it's because I'm wearing the hat. It looks like it's down today. Google's up. Maybe Atlas isn't going to completely destroy the Chrome business. And thanks for the comments, Shadow Guy. And thanks for the comments, Mike. It looks like AppLovin is up. App has been selling off. It's been interesting. You know, the AppLovin stock, it's been a winner, 254% over the 1 year. Yeah, that qualifies to be put in the winner circle. And more recently, you see this nice little pullback here. Now, AppLovin is the best in the business when it comes to ad tech, and it's super high growth. It's just experiencing a period of high growth, high profitability, high cash flow. And this pullback has given me an opportunity to buy at certain times. I'm sitting on a nice gain, and I keep accumulating this one. Now, this one here, I'm a long-term investor, and you know, if I were to kind of grade my investing in AppLovin, I get a passing grade. I've made money on AppLovin. Okay, that's the goal. But I think I could have made more money if I'd have just held this stock, obviously. But I made money, I sold, and then I bought the stock. And this time, I don't think I'm going to sell it. I just want to accumulate it and just kind of leave it on my balance sheet. It is proving to be a really special business, high growth. Now it's a big market cap, and why sell it? Just hang on to it, and we'll see how high it goes. The valuation I have on the stock is it's discounted at this time, so I'm good buying it. And it's been interesting to share comments with you, Mike, on Discord around App Lovin', seeing what you're doing and sharing what I'm doing with it. All right. So we've got a request coming at you, sir. Could you look at the charts for Lululemon and Oscar Health? Can we move to that? Let's see here. We went over UnitedHealth. We're done. Yeah, I think we're good. So could you look at those two charts, please?
Okay. We'll start off with a 20-year trend channel because I'm always cautious when I see a stock trade in a trend for 20 years and then it falls out of a trend. So Lulu is one of those that has broken this 20-year trend channel and is currently trading below it. So I'm always cautious with companies that do that. You can look at Starbucks, you can look at Nike, follow the pretty much the exact same pattern. So then we looked at Lulu quite a while back. I'll update these trend lines because it's been a while since we reviewed them. So I'll extend that one out just so we can see it. I'm going to change it to a red color because it is a downtrend line. I'll use blue for uptrends and red for downtrends. So let me save that. And you can see that it is touched this upper downtrend line back in June. And then we started on another downtrend and we've tested that one twice. Let me adjust this one a little bit longer as well, just so we can see it better. So about right there. So we can see that it has broken above this second downtrend line. But let's see, it traded above the 50-day, which is declining yesterday. And the market's open, so this red bar here means that it's trading back below the 50-day moving average. So I'm not too encouraged by this chart. It's been in a downtrend for quite a while, and it's trading outside of a 20-year trading range. So for me to start getting excited about this, I would need to see it break out above this trend line because this confirms that it's in a downtrend. 200-day is declining. That confirms we're in a downtrend. So it would need to break above this trend line for me to feel like I was buying into strength instead of buying weakness.
Yep. And, so Lulu is discounted by like 28% based on intrinsic value. And I would want to take a look at where the consumer is. If the consumer is doing well, then Lulu is probably going to do well. The stock can't go down much further. It can go down, but geez, at what point is this stock just going to be so discounted that it's just not going to be ignored?
One of the things that concerns me is they're in the process of opening up physical stores. And when you do that, you pretty much lock in some fixed costs. And I don't think that's going to help them.
Yeah, I can understand that. Michael Burry bought into Lululemon. That's a pretty good vote of confidence. And two other significant investors, Francois Wauchon and Lee Ansley, own Lululemon. But the biggest name going into the stock is Michael Burry. He's not afraid to go into something that he thinks is discounted and a good opportunity. So we'll see how that trades. You want to take a look at Oscar?
Okay, how
Oscar
about
had a good day yesterday. I noticed that. And it's down today.
yeah.
But I like the high level chart that I'm seeing.
Yeah. I think it's actually looking somewhat constructive at the moment. So um, we do have some uptrend here, which is nice, and it has held that several times. Let me save this for future reviews here. It helps when we draw lines, like a month or two ago, and then we can come back to them and see if they're actually still working. So I like to save these just so we have them and can look at how they're working.
Mm-hmm.
So this one does look pretty constructive to me. The 20-day is upward sloping, the 50-day, the 200-day, they're all upward sloping. It's done a really good job of holding at least a 40 RSI. So on pullbacks, if it can hold a 40 RSI without going into an oversold condition, that's very supportive from a momentum standpoint. Most of its time, I think, has been above at least the 50 line. The PPO is declining, but it's still in bullish territory. We did have a lot of distribution at the beginning of July, but since that time, it's been on a steady increase. The money flow is what I call in no man's land. It's between 0.05 and minus 0.05. Once it breaks above 0.05 or higher, then we're in a bullish condition. So this chart looks somewhat constructive to me.
Yeah, I agree. I like where it's headed. And there's a lot of potential in Oscar. The high growth, they're in a space where I think they have huge addressable market. And with AI, they could manage their business, which is health insurance uh, for individuals and small businesses. The big guys, UnitedHealth, Elevance, they don't want to touch that because it's just the administration of it is difficult. Well, if you can get agentic AI to help you manage a business like that and you become capable of doing that at a profit, I think Oscar could become really valuable, like 10 bagger. And that's why I own the stock.
Look at the volume trend as well. It seems like the first half of this past year, the volume was pretty low, but then we had a step shift. I mean, we went from an average of 10 million shares a day up to 30 million shares. This is a 50-day moving average that I'm looking at.
Mm-hmm.
And we're down to 18, which is still twice as much as we were seeing, or 3 times as much as we were seeing over here. So the fact that the volume has gotten so high, a lot more people are interested.
Okay.
And that
Very
seemed to
good.
happen starting in May.
Thanks, Daryl. Let's take a look at some other requests that were out there. Shadow Guy has been I think, an investor in Montana Aerospace, which is traded on the Swiss stock exchange. Boy, this stock's had a very nice 1 year, and look at the year to date. Wow. This is an aerospace company. Um, Aerospace has been a good place to see appreciation. And I think in Europe, there's been some stories or some changes on how much military equipment each company is going to need to have. And I think that's really creating more demand for Montana Aerospace and others. So this stock's really worked, and it is a small cap. This is in the Swiss franc, 1.77, I believe. You need to add like 25% or so to that number to get to a US dollar-based market cap. This has a high PE, but it's coming down next year because I think it's going to grow into that PE. The growth rate has been really good at 15.72 for the trailing 12 months. So that looks really good. Margins, gross margins are better than what we're seeing with like an RTX. 41% is really good for an aerospace company. So this stock's looking good. Looking really good. I think I have a valuation on that stock. I do not. So is there, could you show charts on?
I don't find a symbol for this one in stock charts, so
All right.
I'm not going to be
No
able
problem.
to review it right now.
Okay, no problem. So that's Montana Aerospace, a real good winner. And the next one requested was CNC, and I think that stock's really moved this year. Whoa, really dropped. Centine operates as a healthcare enterprise that provides programs and services to underinsured and uninsured families and commercial organizations in the U.S. So they're providing Medicaid, Medicare, and so forth for people that don't have a lot of money and they need healthcare. So I know that there was some decisions made on funding of healthcare, and it negatively impacted this particular segment of the market. I think that was the reason why we saw a big drop. This isn't a space that I'm in. 17.71 billion, revenues are 159 billion. They're going to announce on October 29th, so that'll be next week. It'll be a week from today. And PE is really low this year, 8.88. Stocks down a little bit today. The 1 month, it's up 13.42. So it's when you buy, how you buy that really makes a big difference. And this one here, you could have bought shares at 25 and you're sitting at 36 now. So there's plenty of choices within health insurance payers like this, UnitedHealth, OSCR, and there's plenty of choices to choose from where these stocks do look discounted. This one here for the trailing 12 months, they're growing by 10.7%. And I think some of the decisions that are being made, I think we're still in the shutdown, right? The government shutdown. And as it looms, one of the key negotiation topics is healthcare. Like one side really wants to keep this funded. If that side wins the argument or keeps the funding in play, I think Centine's going to do well as the other health insurance companies. So it's predicated on that piece staying in the overall budget. The revenue growth is really good. 16.5. I mean, this is a big outfit, right? We're not talking small amounts. 159 billion is a pretty big company. That looks good. Net income went down. And free cash flows look okay, but not as good as in the past. In the past, these guys were booming with cash. Look at that cash. So they're trying to build up their cash flow. We'll see how that goes. Their margins are low because they're basically trying to have as big of a member base, and then being able to have a good margin for their industry, and then creating that cash. And I don't know that they're going to have a combined or a ratio that I'm looking for. I'll look it up. Do you have charts on CNC?
Yep.
All right. When you look at the charts, I'm going to look for a couple other ratios on these guys. And I don't know that I have these guys in my valuation. I'll check on that. But let me pass it over to you on CNC, and I'll do some more research on them.
So I'm a holder with CNC. And what I was doing with this one, because of this volatility you see here, I was wheeling this with some options, and then I got kind of trapped in it when they announced. Let me go back out to 1 year. I'm still trading options on it, but a little bit harder to do at the moment. But right here, they dropped their guidance. I think UNC actually dropped their guidance in May. That should have been a warning sign to me for healthcare in general. The thing that threw me off was UNC had the Medicare challenge, the legal challenge in the Medicare, and CNC has not had even a whiff of that, I don't think. So that's what threw me off here, but I should have had a red flag raised when UNC pulled their guidance after the passage of the Reconciliation Act earlier this year. I think that was on July the 2nd. So as soon as that bill was passed, CNC come out and pulled their guidance as well, and we got a big hit here. So they did go all the way down to 25. They've been doing quite a bit better here. They're trading just below a rising 20-day moving average. Looks like the last 4 or 5 days have been below that average, and they're currently trading just below it at the moment. The 50-day has turned around from a decreasing average back up to a rising average. 200-day is still declining. So I don't think we have any what I'd call the trap longs up for another $40 or so. I don't think we have much to worry about there. We do have a 200-day, which is sitting at 48, but we're still quite a ways for that. But we do have an upward sloping trend at the moment.
Very good.
The RSI is above 50. The PPO's in bullish territory, and money flow is also in bullish territory.
Thanks, Daryl. Good stuff.
Yeah, you're gonna have to be patient with this one.
Now, one thing that's happening with CNC is the medical loss ratio. This is basically last year they were at 88.3, which is very good. You have $100 of premiums being charged. Your expenses are $88.30. Your gross profit is a little over 10%. But now they're operating with 93, so they're getting squeezed. So that's moving in the wrong direction. So we got to keep watching that on all these health insurance payers to see if they're getting their businesses to be stronger and better. So that was CNC, and we're going to move on to Google, which was brought up by two investors. For some reason, they buy into GOOGL when I buy into GOOG, and I don't know why they have two symbols, but whatever. I think they both trade in the same direction. So these guys are back. Look at that. I guess Atlas isn't going to bankrupt Google. And this stock is, I mean, it's a really good stock that we tracked. And I was reinforcing how this is just one of the most valuable businesses in the world around this range. And the stock, at some points was at $166 a share. And, those who are either holding, invested, I did both. I was buying here, loaded up on it. And Google Alphabet is the stock that's received the most capital from me. And I'm glad because it's now producing great appreciation. It's helping me have a great year. So a lot of good things are happening. Google's got a lot of momentum. Gemini is the number one downloaded app on Apple's iStore or Apple Store, whatever they call it. It's becoming the most prevalent AI app out there. And they're going to announce on the 29th. So that's going to be a week from today. That's going to be huge. Got to do a watch party for Google. This one here, look at this PE ratio 27. As we look at businesses that are like promising the world and saying, man, our business is awesome. Our PE is 50, 80. Just remember Google. These guys just don't need to promise much because they have it. You want the best search engine on the planet, you got it. You want RoboTaxi, the leading RoboTaxi company, you got it. You want the number one streaming platform on earth, number one. Our friends at Netflix, they're so embarrassed by it, they don't even publish the facts on their earnings. YouTube owns 12.5% of streaming on the planet, and Netflix is at 7.5%, and everybody considers Netflix the number one streamer. That's wrong because these guys are bigger and they're growing faster. So you can't catch the number one player if you're not growing faster and you don't have anywhere near the market share. So Google doesn't need to promise much. They have it. And they give you a PE of 27 going to 25. They have a cloud infrastructure business. I mean, it's just on and on. And it's like, yeah, I don't need to use much of my imagination with Google. I just need to read their financial statements when they release them on earnings calls. I need to study the company. And this, I've made this statement, I'll make it again. This is going to be the most valuable stock on the stock market. It's going to get there in the next 3 to 5 years. You know, I think NVIDIA's enjoying a great time, but that's not a sustainable industry. Semiconductor is cyclical. It will have moments when everybody says, hey, the data center is built out. I don't need to buy any more expensive NVIDIA chips. It's also going to see competition from other places like AMD. Apple, they can't grow. Those are the two players in Microsoft. Microsoft's a little more legacy. Their products are more legacy than Alphabet. I think Alphabet has just a tremendous business. So I am all in on Google. And the next one I'll cover. We don't need to see the charts there. I wanted to kind of fly through some of these because a lot of people are tuned in and a lot of requests have come in. AppLovin up 2.5% last month. Provided a nice little opportunity to buy. And I think I already covered this one. So I think we're going to be good on that one. Okay, we covered Lululemon. Had a request to look at eToro. This is a trading platform. They're headquartered in Israel and a lot of their business is done in Europe, in the UK. And their stock has not been doing all that great. They IPO'd May 14th. Just one more example of why I don't buy IPOs. It's like, just let this thing settle down. Give me a couple more financials through earnings calls and so forth. And then we'll see what we got. Because when you look at the fundamentals, this business looks terrific, but the market's selling it off, which is weird because if you look at some of their competitors like Robinhood and Charles Schwab and Interactive Brokers, those stocks are flourishing. I mean, those stocks are going up and to the right, and this one's not. It's a $3.28 billion market cap company. PE is super low at 5.43. Forward P is 16. When will the market start buying this stock? I mean, look at this revenue growth. Looks really impressive. And their free cash flow is there. Operating margins are low. They're small right now. They need to increase that. But I think they have a lot that is impressive. A lot of things that could cause these analysts to say this is worth a lot more. I would be willing to say if these guys are the real deal and their fundamentals continue to grow from where they're at now, this stock's worth a lot more. But for the time being, the market is not buying it. They're like, not ready to buy yet. So We're going to let this one marinate a little bit. I'm going to let it marinate a little bit. I'm not in eToro right now, but I'm watching it. It's a stock that I'm looking at. I'm tracking. I have a valuation on it. I'd love to buy into it at the right time. Is there any chart data you can share on eToro?
I have a small amount of data, but this isn't a very constructive chart.
You know, what's
Much
interesting off the bat is how many people bought when it IPO'd. That's a
exactly.
lot of longs.
Yeah. The highest volume was at that price. So most of the people that look at this volume was 13 million shares were bought probably at 67, $68 a share. So I wouldn't think they're very happy campers at the moment.
Yeah, doesn't look good. I think,
No.
you know, IPOs, some of the best businesses. If you would have bought the IPO, you would have lost money for the first year, 2 years. You could, in my approach on IPOs is let them announce earnings 2, 4, 6 times. Then we know what we're dealing with. They have to answer difficult questions from analysts on their growth. We get to know them better. And then we know, okay, this business is for real. It's going to keep growing and it's a good time to invest. All right. So anything else on eToro?
No.
All right. Moving on. We're going to move on to RELY. RELY is Remitly Global. Remitly Global engages in the provision of digital financial services in the U.S., Canada, internationally, offers cross-border remittances and complementary financial services through mobile application and website. Okay. So they're doing transfers of money. Okay. And these guys, year to date, not good. 1 year, not good either, because look at this. Man, it's just been selling off. Back to the whole IPO story, right? I do not like touching IPOs. It's like a hot pan on the stove. Got to be careful. All right. So these guys are down now. I believe I have a valuation on them because the story is bad, right? How are stable coins going to beat these guys? How are fintechs going to beat these guys? I mean, there's a lot of competition. I would say that much. The forward P looks really good, 19.61, discounted according to the analyst. And what is impressive is they're growing. So when's their next earnings? November 5th. So November 5th, if they come in with a number where they're like, hey, we're growing at 35, 40%, you begin to take credibility away from the story of, hey, are stable coins going to disrupt these guys? Hey, are other forces going to disrupt these guys? Because they're growing. I don't know what those other stories are looking at, but the real life data, the real life evidence is that this business is strong. This is really good growth. Profitability is there, not quite as high as I would love to see, but 59% is good. And free cash flow is there. Not growing it. They should focus on, well, right now they should focus on getting bigger and bigger and bigger. They're doing just the right thing if they keep growing. So eventually they'll become far more profitable once they get scale. And analysts do like this one. We've got 11 analysts covering it, and they think, hey, this thing, worst case scenario, it's worth $21 a share, but some analysts are more optimistic at 32. So the average discount, or I should say the consensus discount, is 58%. Their growth is going to persist according to analysts. We've got 9 analysts weighing in on 2026. So they grow at 20-25%. This stock's going to be fine. It's going to be better than fine. I think it's going to start to rally at some point, but when is the right time to buy this stock? That is the $100 question, and this doesn't look good to me. Investors are not real confident. If you could show the charts, I think it's going to look interesting to see how many stranded longs we have up here and how difficult it will be to see this stock go from 16 to, let's say, 30. It'll be difficult. I think it's doable, especially if they can have earnings reports that really just positively shock the market. Like, whoa, these guys are growing at 40%. Whoa, these guys are more profitable than we thought. They have to deliver that type of update in order to get this stock, moving higher. And if it starts moving higher, if we get a nice trend going, I am going to come off the bench and get in the game. And pretty sure I have a valuation. I do. 68% discount. I don't have a lot of stocks that are discounted that much, but it's not about the discount. It's about the confidence in the market. And what the market has taught me is I could be right, and I may have to wait a long time for the market to catch up or agree and match what I think I'm seeing. So do I want my capital to sit out there for a year? No. I'd like it to sit out there for a short period of time before it starts to appreciate. So I'm going to wait for this one to start moving higher. But it did have a little glimpse of positivity here. So Daryl, let me swing it over to you and see, what are you seeing? What are you thinking is going to happen here?
Okay. Well, we already had a chart on this, which I'm going to need to update. So I am going to just change this downtrend line to the color red, just so we're consistent across all of our charts. And then I'm going to extend this line out a bit just to keep it relevant. And then you ask about stranded longs, so I'll need to add the volume by price bars and tune them down just a bit. Okay, so looks like the largest volume over the last year has been at the price of about 20. Looks like the next biggest block of volume was at 19, so somewhere between 18 and 20 looks 21 looks like where the most buyers are at this point. So we drew this downtrend line probably a month ago and we looked at this one, and it hasn't really made a whole lot of progress. The 5-day has bottomed out and is increasing. It is trading above the 20-day, but that's a downward sloping 20-day. The 50-day is downward sloping and the 200-day is downward sloping, and these are in the reverse order. You really want the 20 above the 50 above the 200. So this is in the reverse order. So for me to get interested in this one, I would need to see it break above this downtrend line, which would also be about the 200-day moving average.
Okay. So if it keeps tracking higher and it starts approaching that line, maybe eclipses that line, then it's go time. Because there's so much discount in this stock. It's not like it's going to go from 16 to 20 and that's it. No. The discount on this stock can go to $40, $50 per share. So I'm going to watch this. Be good to look at this thing.
Just keep in mind, if you decide to beat the crowd and buy it now, we have a double top right here. So it may never break above this line before it turns back south, because we have a double top right here and right here that it couldn't break above. So just keep that in mind. If you're buying early, that's okay if you really believe in the company, but you are going to have some resistance at this downtrend line. Just because it's a downtrend line, you have a 200-day there and you have a double top. So you have some things working against you here.
Yeah. And again, I come back to valuation is the story is causing, I think, a lot of the negative sentiment that, hey, what's going to happen with this space? But if these guys keep executing on their business, keep growing at 35-40%, increasing their profitability, that will not be ignored. It'll be bought into. So good analysis. Thanks, Daryl. Good stuff. And we have our first sponsored super chat. Tyler, thank you, sir. And you want to take a look at KARO. Let's take a look. We'll do a full analysis on this. Never looked at it. So Karooooo provides mobility software as a service platform for connected vehicles in South Africa and the rest of Africa, Europe, Asia Pacific, Middle East, the United States. It operates through CarTrack, Carzuka, Karooooo logistics segments. The company offers fleet management, which provides real-time visibility into the asset base. So these guys are like Uber, like Lyft. What's the other one in Asia? I forgot. So let's take a peek here. So Karooooo. So are these guys doing more fleet management, or are they doing like ride hailing? So they're doing fleet maintenance, fuel management, asset utilization, workforce management, logistics. Okay. So they're helping with, maybe you have a trucking company, you're managing the maintenance, the fuel management. You may have to, especially if you have, I'm thinking of like remote locations, you have to deliver fuel to there. These guys are headquartered in Singapore. Okay. So I was off on the wrong track. I thought these guys were going to be like Uber. They're not. Rule of 60 company. So we heard rule of 40, rule of 70. Now we're on the rule of 60. Okay. So CarTrack operates as a smart mobility SaaS cloud, improves customers' physical operations through real-time data. Okay. So they're tracking the vehicle, tracking all those assets. Okay. All right. So these guys are a software play in the SaaS space. Let me open this up just to have it ready. Perfect. Okay. These guys are they announced on October 14th. So we have some fresh financials that we're going to look at. And year to date, they're just slightly higher. 1 year, 16, 5 year, negative. So they IPO'd, looks like back in April 1st, 2021. And have seen the stock really rise. If you would have bought back in 23, you're sitting on a really nice winner. They have had a recent pullback where the stock sold off. So October 14th, the market did not like what they had to say. Market sold it from 56 to 45. So this is using the ZAR currency. Never dealt with ZAR. This is South African. South Africa Rand. Cool. All right. So 0.057. The conversion is 0.057 to get to a US dollar. Okay. So this would be 250 million in revenue, US dollars, growing at 14.75 quarterly. So 21% looks good. They accelerated their growth rate, which is good. That goes to show that the market likes what they're seeing. The product, the solution is one that that they want more of. Either the same companies are buying more of the product, or more companies are seeing it and buying more of it. So that looks good. Gross profits are going to be good. And then the free cash flow is kind of all over the place. I'm going to study their actual financials to get that. So their gross margins look good. They're little, they're small. As they get bigger, this is going to get probably in the 70s. So that looks okay. And operating margin looks okay. Profit margin looks good. They're small. Okay. So that's where we're at. Okay. So that's there. The forecast. We got 4 analysts covering it. They think it's discounted. And looking at what they're forecasting, we've got 8 analysts forecasting for their fiscal year 27. Their fiscal year ends February 28th. So we're in this fiscal year as we speak. And they're growing at 21%. They're going to grow at 16, 15, and then 5. Okay, so that looks good. It looks decent. And okay, so that's there. And could you take a look at the charts on this one? And then I'm going to start working on a valuation for this one.
Okay. So they did IPO in 2021. And one of the first things I noticed is a few support and resistance points. The first was the high in 2021, which served as resistance. It served again as resistance in December of that year. Looks like they had a big basing pattern and finally broke above that resistance point. So then it becomes support. And they've been trading above that since September of last year. They did come down and test that support line in April of this year. So let's go to a 1-year chart. They do have a downward sloping 20-day that if they stay below the 20-day, which they probably will here for a while, and that's going to cross below the 50-day moving average. The 50-day is upward sloping. The 200-day is upward sloping. And one of the things you'll notice is if this price reversal, which is occurring here in the last few days, fails, and this continues on its current trajectory, the 5-day moving average is still declining, then that support line that I drew that had been tested 3 times, once as support and twice as resistance, would once again become a support test. So that's 5 years worth of data that is still relevant even today. The RSI is in bearish territory, sitting at only 37. The PPO is negative. The difference between the 12-day moving average and the 26-day moving average is getting smaller. So that's why these bars here are decreasing, but we are in bearish territory. The stock has been in distribution for the last week or so. We had a big sell-off here. I don't know what happened here. Maybe an earnings, but a lot of distribution there, and it has been trying to improve, and has since about the 15th of August, peaking out in September and October, and has been decreasing. The money flow is in no man's land. It's sitting between 0.05 and minus 0.05. So the money flow has some issues calculating money flow when it's sitting in between those levels. So it's kind of in no man's land at the moment. Over the past year, it has outperformed the S&P for most of the year. Came down and was about the same performance as the S&P. It is slightly higher at the moment by 3%. It is underperforming the XLK, the technology sector, by 4%, although that has just recently happened. It had been pretty much outperforming the S&P for the past year. So it did come back down to the S&P level in August as well. They're in the software industry group. They are underperforming that at the moment. But once again, they outperformed that industry group most of the year with just a few exceptions. And that industry group is outperforming by 6%.
Very good. So,
by the way, they do have a double top here, so they've got a lot of work to do to break out above a $60 double top.
okay. So I'm right in the middle of creating their valuation. I converted their currency to US dollar, and I'm using a growth rate. I think, Tyler, you wanted to go with a growth rate of 15%. So you got it, 15% on the first 4 years. And since they're small and they are looking at a fairly large addressable market, my long-term growth is going to be 5%. So that's going to be there. I'm right in the middle of it. So let me keep updating the data. I was pulling it straight from their financials to get to hear it from the horse's mouth. And so we have cash. We have cash here. Okay. So have a little bit of cash, and let's see if they have any debt, term loans. They have some debt. Okay. Okay, and their shares outstanding. Man, right on the button. So they're fairly priced on cash. Assuming a 9% discount rate, these guys are small. They're way over in South Africa and other places. Where are they physically headquartered? So they are in Singapore. Okay. All right. There's a lot of talent out there. Totally get it. All right. So let's look at earnings per share. So PE at 24. That'd be fine. You can go higher. They're growing, but they are small. And their profits are supposed to grow by 15%, then 14%. So I'll go with 12. So this is the valuation on Karooooo. and if we went to a lower discount rate, you get a better discount, but it's a higher risk, right? We're investing in an operation that's way over in Africa. They're doing something that is a necessity, right? You have to track these assets. Got it. But the discount isn't wildly attractive just yet. The growth rate on the company is not overly impressive, and they're small. So that's another concern. So let me see if you have any questions on the chat. Feel free to ask, and I'll keep talking about it while you queue things up. One second. So, man, we got super chats coming left and right. Thanks, guys. Really appreciate it. And want to just do a bang up job on Karooooo. All right, so this is an interesting little company. I could totally see these guys being acquired because somebody might want that international exposure and growth. Maybe somebody out of there's a lot of wealth in the Middle East, and somebody from there like, hey, let's acquire this business. Maybe a private equity fund in that area. So these guys, man, if they could grow faster, because this is a small business, it's roughly about 250 million in revenue. It's not very big. And we can find software businesses that are growing much faster. And it looks like you're Canadian, right, Tyler? And so, it's just it's much riskier to invest in a company way on the other side of the world. And we can find other businesses, software businesses, that I think are going to give us better metrics. They can, increase their growth rate. I'd be more excited about it. If they could really get their cash flow generation cranked up, I'd be more excited about it. But for now, I would not put this on my buy list. I think it's a neat business, but it would not be on my buy list. Part of what we've seen in software is that the market hasn't treated software companies all that kindly. Let me jump to a stock that I know can prove that point. And that's like Adobe, right? Adobe, and this is going to prove a couple of things. We just looked at, this is a software company, okay? Software as a service, SaaS, doing logistics, helping companies with logistics. Adobe helps creative people, and the stock's down again. But you see where this stock's been, 28% down. Oof, year to date, 19. And when you look at this chart, and if you look at the last couple years, this thing's just been a dog. And if I was going to use my rationale, I'd be like, well, the financials must be terrible. Nope. They're a big company growing at over 10%, making lots of margins, making lots of money. So market, what's the deal? Well, we're hung up on this story that AI is going to hurt these guys. Is Karooooo going to be affected by that story? Possibly. But I could tell you that the software space is not getting a lot of love. So that'd be another cautionary note is, when it comes to software, some software stocks like Palantir's doing great. AppLovin's doing great. But some are getting slammed, like our friends at Adobe and our friends at Salesforce. So thanks so much, Tyler. Great to see your name on the stream. Really appreciate your sponsorship. And hopefully you found the analysis interesting. And thanks for bringing it up. That's a stock that I have never covered. All right. So real quick, I think Peyton just handled it. So Google, the total market cap is 3 trillion. I know they have two symbols. I don't know why, but they do. They actually have 3. And one of the symbols we can't buy. It's to the founders. So that way they can control the company. They don't want like when you have some of these big hedge funds that buy a lot of stock and then they become a big influence on the company. They don't want that. So I would disagree with this comment, DJ. I think Internet of Things is more of a technology play, like a semiconductor, and it's a device that could be placed on an item, or it could be and then that item kind of has logic built into it, so it could be tracked, it could be reporting its data, it could be doing a lot of things. Where I think Karooooo is more of a, and maybe I'm wrong. Let's study this up because maybe you're right. So maybe they do have some Internet of Things built into their solution. You might be right. Excuse me. Internet of Things platform. You are right. I was buying into the whole SaaS platform. So you are right. Sorry about that, DJ. Thanks for bringing that up. All right. So okay, we'll put mainly a question to Daryl. I know you like WM, which is waste management. But did you buy on the latest dip?
You must be getting me confused with my other brother, Daryl, because I've never owned Waste Management. But I do have
WM is waste management, right?
Yep.
Yeah.
I don't own Waste Management, never have.
I don't
Not that
either.
I wouldn't want to, but
Each time I look at waste management, it looks too expensive.
let's take a quick look at a chart, though. He said it's been dipping lately, and he's been buying it. So here's another one of those powerful. This is 15 years worth of trend here. Just trades in that trend. And it is trading slightly below the midpoint right now. So it's been consolidating for a while, but it's still solidly within a 15-year trend line. I would not be afraid to buy anywhere in between these 2 points.
Consistency. Look at that. And waste management, obviously, it's back to my economics class. It's an inelastic service, meaning we need it, period. It's not going away, period. And these guys have become, I think, the biggest one in the States. So very consistent. Thank you, sir. Thank you so much, Shadow Guy, for the super chat. I really appreciate that. Appreciate you've been a member for over a year. I really, really appreciate that. Great to interact on Discord with you, and really appreciate your support. Little J, thank you, sir. And 5 pounds. Awesome. I'm 5 pounds closer to booking my trip to beautiful United Kingdom. I was in London for 1 day and it was awesome, but it was not long enough. I'd like to spend 3-4 weeks in England altogether. For sure, some time in London and other places. So it is on the list. And thank you so much, Little J. Appreciate it very, very much. All right, cool stuff. And we got comments coming in fast and furious here. So we've got a comment here. Let me see if I'm going to look at BCS after this, but can you take a quick review at GLD? Is that gold? GLD.
Okay, so
yeah, Gold Spider.
Do you want to look at the spider or the spot price, or does it matter?
You take your pick. You take your pick.
Okay, so they're showing only from yesterday, so maybe I will go to GLD here.
Boy, look at that.
Yep.
Big sell-off in the last 2 days.
So this was bound to happen sooner or later. I don't own any gold. But when you get this far above a 200-day moving average, 33%, statistically, for a 200-day average to be a 200-day average, the price has to trade either above or below, above and below that, or the 200-day has to move into this price. So just statistically, to have a 200-day moving average, you have to trade above and below that. And it does occasionally trade below a 200-day moving average. So it is very extended. I mean, we were 33% above that. So this doesn't surprise me. It would surprise me more if it kept getting even further extended. So we had a 6% drop yesterday. Made all the media channels, the sky is falling yesterday, but this is bound to happen eventually, just because
with AWS down, the sky was falling. But back to your analysis.
Yeah, I mean, it's been super strong. It's been overbought since
and I see
29th
a
of August.
huge number of buyers, right around, what's the pricing there?
319 down to 305. That's
yeah, look at that.
Yeah, so if you look at 5 years, most of the buyers are in the 192 to 171 range. So some of these people are going to get hung out to dry.
Yeah, and I don't think gold investors are the type that are like quick to take profits. They're probably buying it for reasons to hedge.
Yeah.
But I think the story I was hearing was that other sovereign nations are buying into gold and getting out of the US dollar. That was one of the stories, and it created an increase in price. But the last 2 days, it's really been a sell-off. I'm not an investor in gold. I invest in Bitcoin, and I've never understood gold.
They're got to be careful with that narrative that they're getting out of the dollar, because that's not true. They did increase their reserve holdings of gold. Basically, after Russia invaded Ukraine, the United States sanctioned Russia, and that just got central banks thinking that could happen to us someday. We may be a friendly country today, but that doesn't mean that we're always going to be a friendly country. So rather than having a large portion or percentage of their reserves in U.S. treasuries, they decided to increase their gold. And that happened. And you can almost, if you go out and look at the chart, you can see that it was a step shift almost immediately after the invasion of the Ukraine. And then once it became so large in the media, then retail investors started coming in and driving this price a lot higher. But if you go and look at the Treasury, foreign ownership of Treasuries, it is still at an all-time high. So don't let people tell you that they're bailing out of the dollar, because they are not.
Got it. All right. So while we get a chance, I wanted to go over Barclays. Shadow Guy mentioned Barclays is having a great day. They announced their earnings. This is a big bank in UK. And when I look at book to value, these guys have a terrific book to value. Good investment. I'm invested here in the States with Citigroup. That's been a good investment, but man, this one looks pretty good to me. And investors have been Really, really winning with this stock. 54% rise in the year to date. 1 year, 62. Looks terrific. Look at that. Talk about a good rate of return out of a bank. So Barclays has been an absolute winner. PE ratio of 8.5, 7.55 is the forward PE. And the price to book, let's see if we've got one here. Price to book 0.66. It's even lower than the previous measure that I had. 0.66 is really low. We want the lowest book value possible. But to give you an example, if we look at JP Morgan, the price to book we have to pay to buy JP Morgan is 2.38. You have to pay more than 2 times book value if you look at the stock price versus book value. So Barclays, you're getting it at a very, very good price for a bank. So all you investors in the UK, you've got a really good bank out there. So Barclays getting it done. All right. So looks like Cartel Raider started a position in Verizon. I like Verizon. Verizon, there's a couple of things that I like about it. First is the stock hasn't really gone places, but the business is getting better. It's a $168 billion market cap business with $137 billion of revenue. PE is really low at 9.28. They're going to announce next week. And they are growing a tiny bit like AT&T. AT&T announced today. And I think the reason these guys are selling off is AT&T and Verizon are kind of paired together along with T-Mobile to some extent. And when it gets to valuation, these guys, I think, are discounted. 21.54%. Analysts believe it's discounted. If you have a discounted stock and it begins to work and you're going to be paid a nice dividend, that is nice. That's like you're getting the cash flow for free if this thing starts to work. Important thing is it has to work on increasing its value. I don't want to sit around, a stock and just sit there with the stock price not going anywhere. But I think Verizon's discounted by 43%. And it's a pretty solid industry stock, safe stock, 43% discount. If it does what AT&T has done, I think there's going to be a lot of happy investors of Verizon because AT&T has done quite well, especially if you look at, the prices you were paying for AT&T way down here, $15 up to $25, and you were paid a dividend. So it looks pretty darn good. AT&T is under pressure because they announced today and they missed. So they missed on some of their financials there. Maybe we can kind of segue into, so Verizon looks good to me. It's one of the better ones in communication services. I like the pure play of Verizon, and I think it's better priced than AT&T because AT&T has been flourishing. It's been doing well. AT&T is under some pressure. The financials have gotten here, and it's growing a tiny bit. These companies do carry a good amount of debt, which is one of the realities of this space. They have to spend so much money on building out their network. They're competing against one another, trying to take subscribers away. And they're discounted by 21% according to the analyst. Their growth is going to be, pretty much slow growth. And this is a stock that, probably an investor that wants stability, a little bit of appreciation, and that income stream from a company like AT&T. AT&T is discounted by 36%, but I like Verizon a little more than AT&T. I think this one can really outperform based on the valuation. It's a stock that's kind of been held back, and it'd be interesting to see where Verizon goes. AT&T is discounted. We'll see where it goes, but the fundamentals kind of look the same on both of these companies. Any thoughts on AT&T, sir?
Yeah, I'm a stockholder. I trimmed a little bit not too long ago. Before we jump to AT&T, let me show you the federal debt held by foreign and international investors. We're at an all-time high. So be careful when you hear people say people are selling our bonds. They don't want our bonds because we're at an all-time high. We're over $9 trillion in foreign held treasuries.
It's like the story that OpenAI Atlas is going to replace Google Chrome.
There you go.
Not exactly a statement formed around facts.
Yep. So if we go to AT&T, there's a 20-year trend channel. They did fall out of the trend channel and moved right back in. I've owned them for 5 years. Here's their 1-year trend channel, which they did fall out of, and they're down pretty sizable today. But I was doing quite a bit. I used to hold 2,500 shares of this. I'm down to 900 right now. And then,
Good move.
if we,
You're learning how to dodge bullets, Daryl. Very good.
yeah, let's, we'll just stay here. They do have a downward sloping 20, a downward sloping 50. The 200-day is still increasing, but they broke below that now. The RSI is getting into oversold territory. The PPO is in bearish territory. I have a price target of about 32 on them, but I'll wait for this fallout to finish off before I pick up any more shares.
Good stuff. Thank you. All right, man, we are blowing up on the chat here. Thanks, everybody. And FYI, I am guilty of once in a while missing a comment. If I miss your comment, I am sorry. It's not meant to miss your comment, but I'm kind of doing multiple things at one time. I'm trying to be careful not to miss anybody's comment. All right, so yeah, so Saeed making a comment around Lulu, and I get that everybody's going online and these guys are opening stores. I think it's one of the necessities on apparel is you need to get your apparel in front of eyeballs, and Nike has stores and other apparel companies have stores, so it is kind of a necessary evil, so to speak. It changes their business model to a less attractive business model. I would agree with that, but maybe you're right that maybe they should challenge themselves and say, how can we grow without opening stores? Maybe we need to hire some more data scientists to help us market online better. Maybe we need to get on Reddit or whatever ends up being like the channel that can drive up sales. Maybe they need to do that better. You make a good point. Rather than just giving in on, okay, we can't grow the most desired way, so we're going to grow the less desirable way, which is opening stores. Daryl, how heavily do you weigh seasonality? We have had back-to-back positive Septembers despite the bearish historical trend. Does that shake your confidence in seasonal patterns?
Okay, so I do use them. I think it's basically statistics. And in case you don't know, I've been heavily trained in statistics, so I know statistics pretty well. So it is just statistics when you're looking at past years, and 80% of the time they exceed closing price exceeds the price at the open of a month. It's just statistics, and of course they can fail. What we're driven by right now that has been in place for a while, but it is even getting stronger today, which is going to change the statistics, I think, over time, is we have a lot of passive investors. There is billions of dollars every week just going into the stock market.
Correct.
We haven't always had that.
Yep. And
so it's gonna change the complexion of the statistics over time.
let me double down on that, which is, we can, we can look at the market, and like 30 years ago, the market was one where you seldom saw a popular theme being that, hey, investors are going into individual stocks. It was almost like, man, you got to be crazy to do that. You were going into mutual funds. You were buying health. You were hiring wealth advisors, and maybe you could afford a health advisor too. And so the behavior was very different, and stocks were kind of a wealthy person's game. Like, oh man, and so forth. Well, fast forward, technology and the internet. The internet connected us. Now we're all connected. Here we are. We're on YouTube. We're streaming on X. We're streaming on Facebook, and to a global audience because we're connected. And then the platforms made it far less expensive. Robinhood shows up and says, we're going to do zero cost trades. Boom. So now you have retail investors that have the tools, the information online. They're building the skill set to invest on their own, and it's taking money out of the hands of Wall Street kind of money managers, so to speak. And people are easily buying into the S&P, buying through, pick your favorite ETF. And that money flow, people are getting into a very positive habit, which is either through your 401k deductions, or you just like deducting money from your paychecks, or you make a little extra money this month, this quarter, this year. Investing in stocks has become a incredibly fun hobby / money-making operation, right? And it's here to stay. It's I think a lot of the seasonal patterns are going to be changed. The other phenomena that we're seeing is the prediction markets. Prediction markets are really neat. Again, that's kind of changing things. So I think seasonality is still useful, but it's also good to keep an eye on what's happening. So,
yep. I will, I still have a lot of confidence in it. And I will use anything I can get my hands on statistically that puts the odds in my favor. And that's what I use all of those things for, is to just, if I can increase my odds even a percentage, that helps at the end. So,
all right. So let's get into some stocks. Root. So I did some deep analysis. I shared it with the community on a video of insurance companies. And Root continues to be a discounted stock, but I saw some insurance specific metrics that concerned me. So I got out of the stock. You can see the discount on Root is really, really good. And what were the issues that I had with this stock? So the combined ratio, which is your incurred losses plus expenses over your earned premiums. And Root was the PE is really high and the price to book is really high. So it just ranked really low. The combined ratio was 95, which wasn't great. It wasn't as bad as Progressive, but it's kind of on the high side. So I'm like, you know what? I got to pull my capital out of this. I'm not necessarily thinking that we're going to have a massive correction, but I'm like, I can build up a little more capital. I've been trying to lean down certain positions like Adobe, Airbnb, Zoom, And Root ended up being a stock that I sold because of these metrics. These metrics were a reason to pause. Other companies, and check out that video if you haven't. It really shows, what's good about this industry is you can compare what I think are 7 companies that are similar, some growing faster than others, but they all sell insurance and they sell policies and they have to pay when somebody has to. And I'm not sharing my screen. Look at that. All right. So like I was saying, Root is their fundamentals look good. It's a valued stock. I'm going to show that discount a little bit. But when I compare their PE, it's the worst one out of 7 insurance companies that I looked at. And then the price to book is the highest, which is, you don't want the highest, you want the lowest. The combined ratio, it's the second worst, second worst to Progressive. So all those things kind of made me think, well, maybe I could sit out, a quarter or 2 on Root. I like their business model a lot. I just need to see these things improve. So that's why I got out of Root. And their valuation is excellent. But for now, I'm just going to sit it out. I was looking for places to create capital, as I mentioned, and Root ended up being the stock that I could sell and create some more cash. I've been forcing myself to pick a stock or 2 each week that I'm going to lighten up on because we're in a great market. It's been going up. Okay. So discipline. I'm going to take some of that capital out, take it out of some stocks that are maybe are losers and put it into some winners. And Root was one of those stocks that I took out. Looks like I probably did myself a small favor. It's been on a downtrend. Not good. A pretty good downtrend too. So I'm out of Root for the time being, but I really like the business. I could totally see myself coming back to it and buying into this company. If they can improve their metrics, I would be a buyer. So that's where I'm at with Root. What are you thinking on Root? What are the charts show you on Root?
I like these breakouts when this happens. So this was trading at $6. It had been trading for probably 7 or 8 months in this price range, and then all of a sudden it starts running up and breaks out above the previous high. Then we consolidated, and then it breaks out above that high. I like those breakouts, but like you said, here the last few months, it definitely has been on a downtrend. The 200-day is still upward sloping, but the 50-day and 20-day are downward sloping at the moment. So I don't know where we have, well, this actually looks like pretty good support. So I can see that that first box to the left, it touched this point 3 times as resistance, and now it is at support. So we have pretty good support here.
Great. Thank
if
you.
it falls anymore, then we could be down around probably half, by down to 40 or so.
So we've got a couple other stocks that have come up, but let me do a time check. We're at the 2-hour mark. How you doing on time, Daryl?
I'm doing okay.
All right, perfect. So the market is selling off today. Not too bad, but it looks like Microsoft's going up, Google, Meta. Looks like the consumer staples are going up, meaning investors are looking for a little bit of safety. Energy's picking up a bid. That looks nice. And one of the stocks that's come up is Robinhood. Why am I missing? I thought I had it ready to go. There it is. Okay, here it is. And Robinhood's down 5.26. It's down. It's a $110 billion market cap stock. The 1 year looks good. Year to date looks good. The 1 month Look at that. It's got an iceberg look to it. And it's come down quite a bit. Now, I don't know why it's down today. It's probably some little bit of news or something. But I'm not concerned. This has become one of my biggest holdings, not because I poured a bunch of capital like the case of Google, where I did pour a lot of capital into them, but I poured some capital, and it's like planting a tree, right? You planted a little tree, bought at Home Depot, and boom, it became this giant tree. So this thing's really gone up for me, and it's been great. I bought when the buying was good, and now the stock, I think I'm up 700 or 800% on it. So it's become like an over $200,000 position, and I am good with it. I'm not going to buy anymore because it's such a high value stock in my portfolio. And I think we're going to be fine. The prediction markets, what I learned last week, it's a viable business. They're doing it through Kalshi, which is one of the prediction markets, and they're getting a lot of usage through Robinhood, which is providing it in partnership with Kalshi, which leads me to think they're probably going to acquire Kalshi at some point. And they're growing really well. So we'll see how they continue to go. They're going to announce their earnings on November 5th. So we're a couple weeks away from that happening. So Robinhood, I am A-okay with the stock. Has a little pullback. No big deal. No big deal at all. Now let's see if Bitcoin is going down or it's going up a little bit. So sometimes Robinhood trades with Robinhood. So now I can't find Robinhood again. Here it is. Any charts on Robinhood that you could share?
Yeah. So this is a 2-year trend channel, and basically it is traded above that trend channel during February of this year. During the tariff announcements and the tech sell-off in February, we got back down to the midpoint. And then in June, they crossed above the upper level of that trend channel and have traded above it ever since. The 200-day is pretty much right in the middle of that trend channel. If we go to a 1 year, it is trading below a 20-day that is beginning to roll over. So we'll probably see if it continues to trade below the 20, we're going to see prices coming down. The 50-day is still increasing, and it looks like it tested that at some point this morning. Looks like it may have bounced off. We'll see if it can hold that 50-day. If it breaks through that 50-day, then you're probably looking to get back into this channel. But it's still a 2-year channel, and anything in that price range, I think, is totally justified. The money flow has been positive since March of this year.
Man, look at that. Cool. Thank you, sir. All right. So it looks like we made it through the end of the list, and good stuff, everybody. Great chat today. Awesome chat. We're going to end with Adobe, and this is a stock that I intended on covering today. And Adobe is over the last 5 days is up almost 7%. And I decided to start selling some of my Adobe stock. It's just been, it's been hard to watch. The last couple of years, it's just been, beat up by the market, sold off with the whole story that AI is probably going to hurt Adobe. And it's been a very interesting, I think, conversation with the community, because some of the community members are disagreeing with the rationale of selling Adobe on my part, which I appreciate the feedback. And I'm glad that we're having kind of a, is it a good idea to sell off Adobe? Is it a good idea to buy Adobe? So we're in a very short trend here. It'd be nice to see that trend continue, most definitely. And it'd be really nice to see this market, kind of get its head straight around software, because this is a software company, has terrific margins, has terrific cash flows. It's growing over 10%. And this is a leader in their category. So it has everything that I want. Now, if it continues to rally, I need to stop selling and I need to start buying. As mentioned, I'm kind of, challenging myself as I go through and find places to harvest some capital to put it into some winning stocks that I have. And Adobe has been a place where I've been harvesting some capital out of my portfolio. So let's I'd love to see the charts, Daryl. That's one of the things that I really wanted to complete today. Can you show us the charts on Adobe and interpret them for us?
So we've looked at this one before, and we saved this chart. We have a downtrend line that we drew, and then we have a shorter term downtrend, which it has broken above that at least twice and came down and traded below it. And in the last 3 days, I think they announced a new product called the Foundation a couple of days ago. So I think that is helping press the stock higher. But we've just barely broken above this shorter term trend. They still have quite a bit of work to do to prove that they're not in a downtrend anymore. They'd have to get to about $440 or so to break that downtrend. The 200-day also indicates we're in a downtrend. The 20-day has rolled over. It was declining and now is increasing, as is the 50, and it's trading above both of those lines for the last 2 days. We'll see if this continues, but they still have a lot to prove.
Yeah, definitely. But I'm probably going to buy ahead of that 440, convincing, hey, they're breaking out of that downtrend situation. It's going to be a stock I'm going to follow each trading day. And I don't think the battle has been won. I think they're having a very good 5-day. And if I could see them maybe have another good 5 days, they're going to announce on December 10th, so that we don't get any new data from them until the 10th, any substantial data. And so the earnings are not going to move the stock, but maybe the market's beginning to realize, hey, there's value in software, because Adobe, and I wonder where Salesforce is at. Salesforce is another stock that the market just hasn't believed in. And this one is not having a good day, but it's having a very good 5-day. And if you look at Salesforce, it's also down along the same reasons that the market's like, well, we're not sure AI is going to be a good thing for Salesforce. So for the last couple of years, this thing's been selling off. It did have a really nice rise, but it was short-lived and it sold off again. So Salesforce is probably in a little bit better shape than Adobe, but both of these, if they start to work, I think these are going to be really big rewards to investors, like double, triple one's capital in a year or two, because this is going to be similar to like Netflix when it was doubted, or Meta, or some of these stocks that they were severely criticized, doubted, and then once investors realize, hey, there's great fundamentals here, a lot of investment poured into them. So we'll see where it goes. All right. So good stream. Let's kind of end it there, unless there's Any more chat? Nope. Great chat today, guys. Thanks so much. Thanks for all the positive comments and for all the chatter. Looks like the market is got some green spots. Google's getting its money back that it lost yesterday. That's good to see. And thanks, Mike. Thanks for the comment. Anything going on with your channel that you want to talk about, Daryl?
Oh, let's see here. Just to let everyone know, I'm putting out videos on my holdings as they get closer to the announcements. So I did AT&T, Agree Realty, RTX, and Citi, and I'll be working on some starting today and the rest of the week and over the weekend on companies that are reporting next week. So these are anywhere from 9 to 12 minutes, covering various charts and covering valuations and a few metrics and looking at the charts, of course. So anyway, you're welcome to take a look at those if you're interested in any of those companies.
Thank you. Excellent work today. And everybody, we're going to live stream this afternoon, 4 p.m. Eastern. We're going to focus on Tesla earnings as well as anything else that comes up, including any requests to come up. But Tesla is going to be the main entree to that particular stream. Join us if you can. It'd be great to have you. Everybody, good luck today. The market's down a little bit. We'll see how it trades today. And we'll see how Tesla moves tonight. That's always interesting. So everybody, thanks for attending the stream. Have a great day.